Now, keeping it in the technology theme, China Mobile Games and Entertainment Group, or CMGE, China's largest mobile gaming company by market share, has just listed on the NASDAQ. The listing comes at a time when it is difficult for Chinese companies to raise capital because of investor distrust caused by some accounting scandals. But CMGE embarked on a different listing process that may make it easier for it to raise capital in the long run.
On Tuesday, shares of China Mobile Games and Entertainment Group started trading on the NASDAQ under the ticker CMGE. It is the first Chinese company to list on the tech-heavy exchange this year. CMGE did not take the traditional listing route that many Chinese companies have used in the past, where they buy an American shell company, change its name to a Chinese one, and then list. That process has been stigmatized as it has allowed some Chinese companies to bypass some SEC rules to commit fraudulent pump and dump schemes. CMGE, owned by VOD1, is taking a different tack, spinning off 6.7% of its existing shares into shares traded in the U.S.
This kind of listing requires the parent company or listed company to have a certain amount of business scale and market value. But the U.S. Securities and Exchange Commission still implements the same reviewing criteria as for those wanting to raise capital.
CMGE says it is not raising any capital with this listing for now.
They probably want to grow the company. They are recognized as the leading player in mobile games in China. And I think to capture that opportunity, you'll need to raise capital.
White says the listing comes at a time when there is residual distrust of Chinese companies among U.S. investors because of a series of accounting scandals, most notably that of a company called Sino-Forest.
You still have to operate and really build trust with these U.S. investors, and that's going to take a few years. It's not going to happen in a year.